and gentlemen, welcome back to Walk the Block, where we are navigating digital finance all together. I am your host, Zenith, and I'm joined by my excellent buddy, Tracker. Tracker, how you doing, my man?
Doing well, man. I missed it. I missed us doing it last week, man. So I'm glad we can get into it. Look, there hasn't been a ton going on, in the last, more anticipation this week. A lot of moving things happening this week. So we'll dive into that, and we're going to get into a lot of other big topics and things that are brewing that we've been kind of talking about. It's kind of coming to fruition now. So we're going to connect some of the dots for everybody here.
We are a little more in tune with this little dirty secret because we're crypto guys that cover the news on a show. But the dirty little secret is that the crypto news has been very slow for like the last 2-3 months at this point. I would argue a good bit of that is due to the government shutdown of the last month, but also just in general, it's definitely been slowing down. But nevertheless, we do have some excellent stuff to talk about with you guys tonight. Up front, we're just going to run through. We did, in fact, get some CPI numbers and small discussion about what they mean. TLDR, inflation's backed up to 3.0%, and we'll talk about what that means. But more importantly, the big story of tonight is we're going to be talking about the trade deal that's going on right now with the US and China. At a glance, it seems pretty straightforward, but there's a lot more going on in the surrounding circumstances that we want to talk about, break down, and then also explain why it applies to the markets. There's two kind of things that really apply to it. One is just the overall business environment, but number two is kind of the ongoing international financial wars at stake there, and how the diplomacy between all these different countries will affect us ultimately, and more importantly, it affects the currencies that are involved, which, by the way, we all use because, yes, the US dollar is still the world reserve currency, and we'll talk about what that means. Outside of that, if we have time to it, we have one more little pulse chain topic that we want to hit at the end. But outside of that, am I missing anything, good sir?
No, a lot of good stuff to get into. I guess before we get into it, just like, the overall markets or how we're looking, I know we've been kind of chopping sideways, and I know the big theme that everyone's looking at is, one group is in the 4-year cycle. Everything's going to end on the 4-year cycle. Some are in the camp that we're going to be an extended cycle. Both have pros and cons, though, why they're backing and supporting that. I think if you take this sentiment across the board, most people think that they're in the 4-year cycle camp, which is ending soon. I know we have expressed, or I have expressed, I don't believe we are. And to be clear here, when I say, I'm not going to sit here and just try to put a time on it, but do I think this is going to extend into Q1 of 2026? Yes, I do. I think it's absolutely going to extend into 2026 Q1 for many reasons we already talked about, so many in the show. Do I think it's going to extend into maybe summer? I don't know about that. Like, I like to take it step by step. Depending on how quickly the markets get ahead of themselves, the more bearish I would become. The more slow grind or more healthy climb, the more I'm willing to hold longer. So I guess that's kind of the sentiment, at least how
that makes sense for sure. Tell you what, you mentioned it, so let's go ahead and take a peek. Alrighty, so we have the old Bitcoin chart pulled up in front of us here. You can see that we just had our daily close at about 114,000 even. We're currently sitting at just $3 under $114,000. But what Tracker was talking about there is trying to figure out what's going on with the 4-year cycle. So last time I checked, it's the end of October. And, well, if you've been following us and listening to the 4-year cycle stuff, you know that if you go top to top for the 4-year cycle, any day now could be the top if you go by 4 years from the previous high, which was early November of 2021. So we got roughly about a week and a half until that date crosses officially. So take that as you will. I happen to think that the argument that the 4-year cycle top to top is not the greatest measurement. I think bottom to bottom, it's a lot better. And, well, we still have about a year and a half to wait out and see if that theory is going to hold true. But as far as the top to top idea goes, yes, now is kind of that time to see if it actually comes to fruition. So theoretically, if we already saw the Bitcoin all-time high, it was this one right here at $126,000. No real altcoin season behind it, and we have not seen a rotation into altcoins either. So I think that is one of the big factors that we can point to and say that, no, I don't think the cycle's over yet. I think there's still some juice to go. And if you look at the levels that people have talked about, yeah, I think we are just barely hitting some of those like super conservative lower levels for all-time highs for this cycle. So that's another reason why I believe so. Anyways, let's get into the chart a little bit. All right, like I said, sitting at about $114,000. We did what I believe to have as a confirmation of a new cycle. So we had our flash crash. This is the big red candle right there. That one was when we had the great liquidation event where $19 billion was liquidated in longs and shorts. And then additionally, we had a recent low all the way down to $103,600. After that, we have started climbing back up. But what I look at this one that makes it interesting for me is I look at my moving averages because those are indicators of our momentum over different periods of time. Notably, the purple line here down at the bottom, that is our 200-day moving average. That is our long-term momentum indicator. We dropped below it, came up, dropped slightly below it again, and now we were back well above it. So what that means is, we were testing some serious downwards pressure there for a while, but notably, we were back above our 20-day, and we're trying to break above our 50-day moving average. So our 50-day moving average, that's our darker blue line here, and the teal or the light blue line, that's our 20-day moving average. So those are your short and medium-term indicators. Currently, the 20-day moving average is a little down in the dumps, largely due to all that negative price action we had over the last 2-3 weeks. 50-day moving average looks very flat, actually, considering that we've chopped sideways for a good amount of time here, pretty much looking like, back since May. So what is that, 5 months effect, 4 or 5 months? So call it a consolidation range, call it just normal fluctuations, but that is what it is. As far as the 60-day cycles go, it appears that we had what looked like a day 34 high and a 46-day cycle. That is a little odd to have a cycle high after day 30. It's not that far after day 30, though, so it's not too crazy. Because if you have it after day 30 in the cycle, odds are you're going to go a little bit longer. Notably, 46 days is pretty short of 60-day cycles. All things considered, though, that is still well within the realms of possibility and plausibility. So I will take it at its face. And by the way, I think our RSI does confirm it as much. We had the lowest RSI reading on the cycle low right there. And since then, we've been moving up and continuing to make higher lows. So, as it stands right now, I do believe we are in day 11 of a new cycle, heading in towards what could be the final cycle of the year, or maybe we'll start another cycle as we go over the new year boundary. But outside of that, what I'm looking at right here is that we are going to be dealing with this $116,000 level, 116 to 118. I think that's going to become an area that we're going to have to move through, largely because it acted as support back in July and a little bit of August. It acted as some resistance back in September, and it looks like we touched it once as we were coming back down this way in October. So, looks like we might have gotten rejected off of it once. We'll see where we settle out. Maybe use that 20-day moving average as a bit of a support before we can start moving back up towards those higher levels, which, if we're on day 11 of the cycle, if that's the case, it means we got a lot of run room. And I think that we're going to have room to run to the upside because all the indicators show, based on the liquidation and the recent low event, that people are not shaken out of this market. No one's selling off the bags yet. And in fact, people are actually adding on to the bags. So if that's the case, then that leads me to believe that, yes, we do have some upwards pressure to run. Real quick, let's take a look at the old Ethereum. Ethereum, slightly different story. Different low date. They had their low on the great liquidation day, but since then, we've been making higher lows steadily. And again, that RSI down at the bottom there, it's creeping towards the upside, which is good news for trend. As far as the moving averages, our 20 is below the 50, meaning that in the short term, we're looking a little more down, but at the same time, we have broken through it. We've tested that 50-day moving average, similar to what we did on Bitcoin, and we're moving upwards. The one that I like about this chart, though, we are well above our 200-day moving average, meaning that we are well above what our long-term trend has been showing. So Ethereum, I think, is showing similar signs as well, which is upwards trajectory. And I know, time for the shameless self-promotion here. But folks, if you want more of the TA, this is all we're going to do here today on stream. But we're doing streams in the Telegram live. So if you would like to join us for those exclusive streams where you can actually hang out live with us there, jump in on the mic yourself, ask some questions. If you have any coin requests, we also take those, as well as just any general topics at the end of it when we open up the floor to Q&A. It was a great time. I had two excellent gentlemen join me last week, and they had some really good coin recommendations, actually, and we covered TA on that live. So those are now projects that I'm looking more into, and I'm actually kind of excited about. But I'll save the sauce for those boys because we appreciate them the most. Tracker, what are your thoughts overall? Think we're going up? Think we're going down? Think we're going sideways?
I think this is a simple classic case of bulls and bears digesting the markets. And I think once you run out of the bears, you're going to have more potential to the upside. The big caveat that I think the bulls have is there's a lot more people in the crypto world that are bearish are looking for that 4-year cycle pullback. So I purposely like to be in the contrarian camp, and not just contrarian camp, but you have the Fed rate cuts coming that we've talked about. You have quantitative tightening or easing going away. They're going to remove that. Tightening's going away. Quantitative easing potentially be coming down the pike, down the rabbit hole. There's tons of weapons that they can pull levers on to make sure that this thing keeps afloat. There is the risk on asset seems to be warming up, with Russell 2000 starting to peak up in TradFi. Gold has also topped out, had a 10% pullback. I swear, I think we called it to the day. That was just pure luck. But I'm saying though that all the indicators were telling you it was such a over aggressive move to the upside. It got so extended to that move to where gold doesn't move that fast. Now we're going to talk about why gold has been moving aggressively, because I don't think everybody quite understands why it's moving so aggressively. Yes, I get it. It's a flight to safety. Lack in U.S. dollar currencies being traded around the world. Yes, that all of that is tying into this notion. But gold moving that aggressively it was kind of insane. Now, do I think long-term gold's going to be could be a good safe hold? I do, but I think with this nice 10% pullback, this is a typical, we pointed it out a couple of weeks ago. You're going to see this typically is now where people who were in the gold trade start to unwind some of those gains and start allocating them to other risk on assets. Crypto is certainly in that ballpark, and that's just a simple rotation. This is nothing exciting or new. It's just, that's all it is. It's just a rotation. Not to say that Bitcoin, gold's going to just crash, but I think it's going to feed into the crypto, and I think this is why you're going through this whole digestion period, where you got the tariff talks, you've got all this uncertainty. But once you have the uncertainty and everything in place, now on top of that, you're going to have just a rotation like I've talked about. But you've got to unwind some of the people who want to get out of the market now, who maybe been in since the beginning of this run. Certainly in Bitcoin, they're getting out. But then at the same time, you have TradFi coming into fixtures now that we've already talked about numerous times on the show. So you're going through this digestion phase. That's the simplest way I can put it through, is that's what you're going through. And I think it's going to be, once you get through this digestion, it's going to be the next leg up. That's the 2 cents I can put out.
That's fair. Did we get a little lucky with that gold call? Yeah, a little bit. But at the same time, though, it makes sense. And by the way, it's not single factor of like, gold price is down because everyone's cycling into crypto. No, this is a multi-factored look at what's going on here, and we're definitely going to break it all down. But you actually hit on one of the other important things that we do need to discuss tonight. Just as a friendly reminder, folks, Wednesday is the big day. That is when the Federal Reserve is going to be having their meeting, despite the government shutdown, because remember, there's nothing federal or reserve about the Federal Reserve. They are an independent banking body that controls the interest rates for the U.S. monetary policy. So shutdown doesn't matter to them. Jerome Powell is still going to get up on the mic and speak his piece. And as it stands right now, we are at 98% chance of a 1/4 point reduction rate. Again, these data points come to us from the futures market and poly market, a betting market where people put their own cold hard cash up against the decisions there. So you could argue that 2% that's missing are people that are making contrarian plays as opposed to just going off what is most probable. So as it stands, this is one of the Federal Reserve meetings where it is the closest to consensus that we could possibly have when it comes to our prediction tools. And if you listened in when we covered Jerome Powell last time, he was saying that this is not a single point cut that they did back in September, but it's the start of a new policy that they're going for, which he made it sound like they're pretty much going for a couple consistent 1/4 point cuts in order to get this trajectory going. Am I missing anything?
No, I think those are the main talking point. I think there's a few more things that are happening, but I think that's the main driving pieces for this week. There's a bunch of moving pieces. It seems like every day there's something going on. I know Wednesday, I think, is the tariff talks with China, renegotiations with China and Trump and the administration. I think that's going on Wednesday. There's just our Thursday. I forgot which day it is, but this whole week is like packed with just major things happening all week. Yeah.
True. Speaking of something that happened, not this week, but last week, the Bureau of Labor Statistics, they did us a solid. These guys are a government agency, and they are affected by the shutdown. So we've not gotten a ton of data from them, but we did get inflation data for September. So what do they say for September? Well, inflation's back up to 3%, baby. So a little clearer picture. Here's what we got going on. That little dot right there we're at, that's 3%. You can see that we are now at 1, 2, 3, 4, 5 months of increasing inflation. Been creeping back up to 3% there. I know 2% is the target, but like we talked about with Jerome Powell talking about last time, they have shifted what they believe is the highest demand or the area of larger concern for them. Because remember, the Federal Reserve has their dual mandate. They're going for stable prices and full employment. Previously, inflation was the big boogeyman. They got it down to an area where they thought it was about even. And then most recently, we had unemployment coming up as the primary concern. Notably, it's all about the jobs reports that have been coming out. The revisions have not been kind. So have there been a ton of layoffs? No, but there haven't been that much hiring either. All the predictions that they have for adding probably like 80, 90, 100,000 jobs per month, those have been revised down towards about 10, 20,000 or even zero for a couple of the past months. So out there, people aren't getting fired, but it's very hard to find a job right now. So that's what we're dealing with. So all that considered, inflation going up to 3%. Is it great? I would argue no. Is it going to change the game? Is it going to change Jerome Powell's mind about what he thinks the game is? I personally happen to think no. The reason that I say that is, well, it's one more data point in an existing trend that was going on when they made their decision to change stance and focus on unemployment instead of inflation. So, Tracker, do you think he's going to change his mind or same trajectory?
I don't know, man. I think it's going to be just a quarter of a point. I think it'll be that, and it'll be kind of a quarter point, like they've already kind of suggested. Unless data comes in, and I think the data's been coming in favor, but he's not going to get too aggressive. He's just not. And honestly, at this time,
that's just not Jerome.
Huh?
That's just not Jerome. He's just not too aggressive with anything.
Correct. But I think it's also he doesn't want to. There's this whole talk. He doesn't want to taint his image when he's done here, because you keep in mind he's out. I mean, they're already talking about the top 5 candidates they're probably going to elect in May to replace him. So his time is numbered. Why stir the pot? Just stay the course and do what you've been saying you do. Why take on the extra risk that could put him in a bad light or cause issues where he cannot be pointed to blame, because he's already going to get blamed regardless. And that's how all these things work, right? It doesn't matter who was in power. Always last person out was the one to blame, regardless of whether it was good or bad. So I just don't see him doing anything aggressive. I think there could be another quarter of a point cut. And I think they're saying maybe in January, I don't know if it's January, but I know in Q1 there could be another cut probably, but who knows at this point. And I think it's really interesting. The one thing that's interesting is I think how we've talked about it many times is how divided the Fed really has been. It seems like they've been kind of really divided. So I think if you get another person in here, it's more willing to do what the administration is going to want. I expect cuts to really start speeding up and ticking up. And I know there were some estimates that we were looking at a couple weeks ago where they were thinking they were trying to drive this thing, get it down by the end of next year down to 2.5. So that's pretty aggressive cutting, and that not to say if they have to, they'll start quantitative easing. I think this administration's made it very clear they will disrupt anything and everything possible to get what they want, and they want lower rates, not just to help Main Street with loans and repurposing allocation and debt, but also for the big U.S. debt and other corporations to react to their debt. So I think that's what it's all going to come down to. They want cheaper rates. They're going to get cheaper rates one way or another.
That's true. I got 2 ideas on this one. So first off, I think that is this level of inflation a concern? I think not. And I think that the current goal of the administration is that they believe that this is a level of inflation they can outgrow through GDP and through the measures that are being put in place with the Federal Reserve. The reason I say that is that 3% inflation, is it higher than we'd like? Yes. Is it crazy? No, not really. So at the same time, it just means GDP's got to go a little bit more than that. And as it stands right now, I think we're still looking for a positive year when it comes to GDP versus inflation. Point number 2, the more cynical take. I discussed this with Brendan last night on DGen Roundtable. It was the idea that what if 3% is the new normal? What if 3% is, as long as we're below 3, we're good? And that's kind of to be expected. Well, if that's the case, then that means that this is business as usual and there's no cause for alarm. Do we like it? Not especially. Are we going to change course for it? Don't think so. So there you go. The economic and the pessimistic take. Call me crazy. Alrighty. Tell you what, let's get into the meat and potatoes of tonight. Good sir, we are here to talk about one thing and one thing alone. Well, actually, it's multiple things, but it's wrapped up in one news story. And that is US and China have appeared to reach some sort of agreement when it comes to trade relations. So, the story starts off with that earlier this month, we threatened China with 100% tariffs. This is a bit of a follow on from the story back in March and April, where they were threatening very similar things as well, but they came to a 90-day agreement. And, well, yep, 90 days is up. So we're getting back to the negotiating table. But the good news is that it appears we have reached some sort of agreement. It's not signed and finalized yet, but there is some sort of framework, as they say, that is going on. So coming to us from Be In Crypto, US China trade truce spurs Bitcoin, key week of events looms. So, following a working level discussion, which conducted Sunday in Kuala Lumpur, Malaysia, the US and China signaled that a framework agreement on major trade issues is nearing completion. The two nations are considering a 1-year delay in China's export controls on rare earth minerals, remember that one, which is the primary point of recent friction. In return, the US is expected to hold off on imposing a threatened 100% additional tariffs on Chinese goods. Currently, it's sitting at 30%, so this would push it to 130%. China also agreed to increase imports of U.S. soybeans and agricultural products. In exchange, the U.S. pledged to review the relaxation of specific export controls and the adjustment of port fees imposed on China. Following the news, Bitcoin went up about 2%. Could chalk it up to daily fluctuation, but it's technically up. And then after that, we also saw other things going up as well. Hyperliquid, World Liberty Finance coin. And then over the week, Bitcoin was up about 6%, reclaiming the $113,000 level, and altcoins followed suit. So, what are we looking at here? Well, the US and China sat down at a trade at the negotiating table, and they came up with the idea that, well, we want export controls on rare earth minerals. And in exchange, we're not going to tariff them. And China also agreed to buy a good amount of US goods. So, at a glance, that's what we're looking at here. But, Tracker, is that the full story?
See, this is the main stuff that we keep talking about. And the United States has been also buying stakes in other companies, like rare earth companies. They're taking like 10%, 15% holdings. And in some case, they get even though they're not the majority holder, they're going to be able to dictate how those companies are being run when they see fit, which is kind of aggressive. Like, that's crazy. I've never really seen the United States step in and start buying it. Now, maybe in history they've done certain aspects to help companies be part, but they're actually taking stake holdings of these other companies. So that's part of it with the rare earth aspect of it all in the negotiations. But this is what we keep hearing about in the news, like rare earth. I know that's a big one, and I get it. It's strategic play in the negotiations, but it's interesting. So you got to really go back to where United States. I'm not going to do a history lesson. By the way, we have a Crypto 101 course out there that you could watch and give you the whole history of how we got here. But the summary is basically United States the world currency was the US dollar. Came out around like World War II, and then it was backed by gold. Then they eventually pulled it off the gold standard, and now dollars were basically backed by nothing but 1970. Since then, the United States has been printing money, and they've been basically devaluing its currency, pissing off the rest of the world because, once again, it's the world currency. Things like petrodollar, it's a term. That's how oil is traded around the world in US dollars, and other things and other assets are traded in US dollars. The repo market is pretty much in US treasuries dominantly. That's all there is. So why all of a sudden have BRICS been getting upset about this? Because the United States has been, basically imposing their will on other countries to get them to take on their debt. And if you haven't noticed, nobody's really buying the US treasuries. Instead, they've been switching over buying gold aggressively. Now, I get it. The flight to safety with gold, you've lost confidence in the United States. And I get it because, I mean, think about it. In 2022, they froze over $300 billion in Russian reserves. So so these things, they're getting a little frustrated. And that's why the BRICS are starting to step up and trying to really negotiate and build their own, we're going to call it its own network. And they actually have a term for it. It's Gold Corridor. It's a network of vaults across the BRIC countries. We're going to talk about a little bit here what that means. But essentially what the China is trying to get the BRIC countries to agree on is getting yen-backed gold, kind of like what United States had did way back in the day, saying, hey, if you had $1, it's worth 1 ounce of gold. The problem that happened was around the 1950s, 1960s. Basically, there was a run on the gold, and then the U.S. government was like, oh crap, we can't give all this gold back. We got to, and this is when Nixon came on to air in 1971 and said everybody, United States, that the dollar was going to be temporarily not backed by anything, and it still has never been backed by anything. And so nobody trusts China by making this accusation like, oh, you want us to buy the yen, they're going to buy us gold. We've heard this story before. So we're not going to go down that rabbit hole anymore. So what they're suggesting, what they've been working on doing, and this has been something that's been happening, this has been in talks for quite a few years now, but things are starting to unfold. For example, gold in July of this year was classified as a Basel III Tier 1 asset. Now, what in the world does that even mean, and why do I care? What it means is up until July 2025 of this year, you could own gold on your balance sheet, but you could only account for 50% of what its value was. Now, by doing this, it's 100% of your value. Okay, that's got everybody very intrigued. That's a reason to buy gold. So now you have uncertainty with the world. You've lost faith in the U.S. dollar because of all of the massive printing press that they keep doing and keep devaluing the dollar. Now you've got another reason to want to own it. You can own now on your balance sheet 100% what your gold's worth. Take it a step further. If gold were to get reclassified as an HQLA, high quality liquid asset, that now would put it in the same category as US Treasuries, because that is what the repo market trades every day. And if you don't know what the repo market is, this is where the banks set a lot of the terms, a lot of the value, what's worth everything. And the repo market is what makes this entire world financial system run. And it's all mainly traded in US Treasuries. And that's going back and forth. But now if the gold were to get reclassified as this, that would now become a major competitor in the repo market against the US Treasuries. So that's something to really mostly pay very close attention to. Those are huge pieces that are turning the tide, because at Basel III, that's huge. The only next step up is high quality liquid asset. And with high quality liquid assets, you can now get loans. You can go to the bank for collateral and say, hey, here's my gold. I want to freaking take out this loan. I want to do this. Right now, you can't really do that. They don't really reflect it as a stable asset to get loans. So this is going to be a change where now would actually be a legitimate threat to the U.S. dollar, which is the world currency. Keep in mind, we've had these fluctuations in the past, and some people get tied up in the fourth turning. You'll hear this term, and really what all that comes down to is, I'm not going to give a whole history lesson, but basically Spain was the dominant country in the world, so their currency was number one. Then it was the Dutch. Then it was England. Now it's the United States. And roughly they're seeing the fourth turning, like every, so many, 300, 400 years, there's a switching or changing of the guard. And basically, there's a rise and fall of these empires. And that typically is what's happening. I think this time around, though, people are starting to realize we cannot trust any country, entity, because they become very biased and that gives them all the power. So with this new gold corridor network of vaults across the BRIC countries, the way it would work is you would basically be able to exchange the yen for whatever gold you wanted to get back on. Now these vaults will be held all around the world, and all these BRIC countries specifically, and then they will own the vaults, and then that will allow the non-centralization of everything to keep everybody honest. Now it'd be interesting if they would end up flipping that over and maybe using like a ledger or blockchain technology. I haven't really dug into it enough to really know that intricate piece, but essentially envision these massive gold holdings at other BRIC countries, so everybody has a share of it across the board, but the yen would be the one they'd be trading in. And this has actually been grabbing a lot of traction, so that's something to be careful on. It's grabbing enough attention to where you can then also take that gold back in and across these BRIC countries, and that would actually allow you to get infrastructure loans and all types of stuff to do around your infrastructure. So that's very interesting to see too. And they're also talking, so this whole new thing is being called a new development bank. This new development bank is basically a threat to the IMF and the Western influence. So now you have a division across the world now, a real threat to what current existing legacy systems with this in place.
That's true.
Yeah, and
Real
then
quick.
we'll go ahead and inject, 'cause I got a couple of other pieces I want to talk, but let's
Yeah,
go ahead and give you your
for
thoughts.
sure. So first and foremost, if you want a good book about the changing of the currency over the years, The Changing World Order by Ray Dalio, that is probably one of the best sources talking about the whole
Correct.
history, all the effects of it. We did cover it on book club over on DGen Roundtable for, the old self-promotion there. But all of Tracker, everything you just said is a perfect, it's exactly what's going on in the world today. I think if you're listening to this, if you're in the crypto world, good chances. And one of the things that we're doing over here is that, hey, we have more options to trade with, so that should be better. As an individual, that's better. But what we're talking about here is we're talking about nation states kind of like trying to establish the pecking order about who's trading and what options that they have. So I know we do have to do a little history lesson on this one, but if you want to look at it, pretty much the world that we exist in today is what we would call a unipolar world. What that means is that the United States has kind of been at the head of it for a long time. And one of the tools that the United States has been using is the fact that the US dollar is the world reserve currency, meaning that pretty much everything when it comes to large business and large international settlements occurs in US dollars. Again, this is where we depart from you as an individual versus a nation state trying to trade. As a nation state, you actually run into the issue of there's only X many dollars in the world, or there's only X many dollars that you have. So then you have to start settling in other accounts unless you have the ability to settle with US dollars, which thankfully, because it's that unipolar world, that's pretty much been the way to do it. And the way that the US has really extended that reach is through giving money to other nations, selling US treasuries, really establishing it in all these different areas as the way to do it. One benefit of being the world reserve currency is that you have a lot of pressure to apply to other nations when it comes to monetary restrictions and sanctions, like we sanctioned the crap out of Russia at the start of the Ukraine conflict. And, well, Russia and China, they're kind of that BRICS nation themselves over there. So if you're trying to establish dominance on a world stage from the nation state standpoint, getting around the US dollar and just the stranglehold that the IMF and the US dollar, the monetary supply has, is one way to do it. So, like you mentioned, up until this point, were people really comfortable trading the Chinese yuan? Not especially. China known to do a wacky thing every now and then. So, what's to stop them from going down the same route as the US dollar with the fiat and just the printing and the going crazy with it? And not much. It's just your amount of trust in the Chinese government, which, unless you're a Chinese citizen, I don't know how much you have. So that arrives us to kind of the news story that we're at today, which is that we have to look at what the established positions are. Were they arguing about the gold back yuan in this negotiation? No. But it does factor into where the people enter that negotiating table and where they stand. The U.S. is entering from the position of the U.S. dollar remaining as the world reserve currency. China is entering that trade agreement as trying to establish or trying to challenge and rival that stranglehold that the U.S. has by just the fact that it has the world reserve currency on its side. So for the crypto folks out there, the only thing that really directly affects you in this trade negotiation is the fact that we're arguing for rare earth minerals and the control exports on those themselves. Those are the things that are used in Bitcoin miners, the ASICs, if you will, the supercomputers that are dedicated for Bitcoin mining in particular, and just a lot of the technological sector. So because of that, that will directly affect you. If those things get restricted and tariffed, well, that means that the cost of mining kind of goes up. Therefore, it does increase the price of Bitcoin a little bit, and it also gives a bit of a boon to Bitcoin miners, which, by the way, China is a pretty big one. Outside of that, this is where we kind of really get into the more big brain ideas, if you will. So you can try to price everything in the world in US dollars, something else, or you can introduce third, fourth, fifth, and sixth currencies in there, in which case you get a very complicated math problem. So this is where crypto comes in. We have the US dollar, we have all the other currencies in the world, we have gold, we have financial tools, and now we also have crypto with it. So because crypto is lumped into this financial product game now, crypto can be one of the beneficiaries of a movement of any one of those other assets. So that's how we got to this point, and that's where we all stand as crypto investors. But on the nation state scale, this is what we're looking at. Do we think that this is a 0 to 1 moment? No. BRICS has been trying to get a currency going. People have been trying to fight the US dollars, the world reserve currency, for a long time. So this isn't anything new, but it is a development with two of the largest players on the stage. which is why we're here sitting explaining all this and trying to break it down for folks at home so they can understand exactly what's going on in the world right now. Sorry, soapbox over.
No, that was really good, actually. It was a good little summary to kind of recap on some of the stuff and clean it up.
Yeah,
And
international
it,
diplomacy. Let's go.
yeah. Now, let's do a little timeline here. Trump, when did he impose the first tariffs, or when did it start? It happened right around January. I'm sorry, not January. When was he talking about? Actually, I'm trying to
Started
remember when did
talking
he.
about it in January. The first round came out March, April timeframe.
Okay, now let's back up the train here. Does everybody remember when? I don't know how many people followed it, but all of a sudden in Q1, around January and February time, all this US gold that was sitting in London was put on planes and flown back to the United States, and people were like, what's going on here? And everybody in the main media was saying like, oh, they're preparing because we're about to go into possible trade wars, right? Well, they move it over. Then, of course, now the wave of tariffs come through. You better believe that those tariff talks have been including these same discussions around supporting and backing US treasuries in some shape or form. Says anytime, I mean, if you go back to your time in the last, I don't know, 30, 40 years, anytime a country started talking about getting off the US dollar, there would be US aircraft carriers off their coast. And that was typically what was happening. This happened in quite a few countries. It happened when the Middle East with Iran. It happened with Gaddafi. It happened with a couple other countries. Venezuela was talking about it when they were doing good, and then that got completely wiped out because there's more to the story. I don't want to get into all that, but there's a deep rabbit hole to go down that one, and that was more around centralization of major banks around the world, and Venezuela was one of the independents. But I don't want to get down that rabbit hole. But what I'm getting at is there's always been to kind of keep the world in line with keeping buying U.S. Treasuries and keep it on. But I think now it's coming to this apex where people have kind of said enough's enough. And honestly, if you live in some of these countries and your inflation is just completely out of control, like in the United States has not even seen anything close to what some of these other countries are facing. And if you're like Argentina, for example, I think they were at 120% inflation, something like that. I mean, that just wrap your head around that. That's insane. So you get paid
Argentina
that
had
day.
120. Shout out to our buddies down in Venezuela. We covered the news story probably a month or two ago. At the time, they were sitting about 230% inflation for the year.
Yeah. And then you had that going on. And then United States just made a deal with Argentina. They just made some type of deal. They worked out a trade agreement. So we're never going to know the details behind any of this stuff, but you can kind of connect the dots. There's definitely the U.S. is trying to be very much involved in any of this stuff. Now, U.S. is still holding the most amount of gold, but even though they say officially that China owns 2,300 tons of it, some people are estimating it's anywhere between 35 to 5,000 tons of gold because they haven't disclosed how much they actually own, and rightfully so. I mean, I get it. The whole world has a huge trust problem. I mean, let's just call it. It's a major trust problem across the board. But the BRICS are trying to figure out a way to how can we build a trust and somehow build a system where we can back it by gold or do this new gold corridor network, and they've been working on that piece. But like Zena said, you're gonna have this other piece of the puzzle, which is cryptocurrencies. So like he was alluding to, you have traditional US dollars, then you have the BRICS trying to form this new system, but then you're going to have the US and the West trying to move more toward digital assets and stablecoins, which they've been using stablecoins to buy up a lot of US treasuries. And that's what's been going on here. So you're having this massive moment around the world on how do we absorb the debt that's been occurred, and also a power shift on who's going to trust who. And this is where you are. And this is why, but it's exactly what's been feeding gold, because think about it. We said in July of 2025 is when it became a Basel III Tier 1 asset. If you look at the gold price chart, we had sideways consolidation, but when we started moving out and breaking out of that range, I think it was around August time, we started moving to the upside, and then we started rallying out of that. And then you had all these people, FOMOing in towards the end here where gold was just going parabolic. So if you look at everything here, yeah, if you zoom out even further, there was a sideways consolidation. There you go. There's that sideways consolidation for a little while, and it finally broke out textbook, and then it started moving aggressively to the upside. I think gold will do fine for the long term. It needs to cool off, but like I said, we're looking for that rotation into higher, riskier assets. And with these rate cuts coming, it's going to feed into it. And this administration has made it very clear they want lower rates. Well, with lower rates, higher, more people want to take on a risk appetite. And keep in mind, S&P 500, the Nasdaq, all these big traditional markets, at least in the United States, have all been breaking out to the all-time high. So TradFi has been doing very well. Well, they're going to look to rotate their money into winners that they've had and rotate into laggers. One of those big laggers is why we're big on crypto. This is why I don't buy into the 4-year cycle. I think they're going to have a rotation into those riskier assets, which is going to be crypto. And to keep in mind, we've talked about all the other things with Ethereum, with tokenization, and this is really happening. I mean, this isn't like some of this random talk. The whole TradFi is starting to tokenize assets. I mean, other articles we've covered over many months ago. Good examples. New Jersey had taken how many properties was it? Was it 33,000, 3,300? What was it? It was some crazy number that of actual real estate properties that they've tokenized and put them on the Avalanche network. So there's things like that happening. Bloomberg and Mellon, BH Mellon, have started working on tokenizing their assets. So these are all starting to really happen. This isn't just talk. Now, are you going to see this on your evening news or on 60 Minutes? Yeah, you'll hear about all this maybe in 5 years on those after the fact's already been played out. But if you want to be an investor and see what's going on, is to anticipate the moves that are going forward, and that's what we're trying to do for you here. Connect the dots and see what's going, and this is what makes a lot of sense. Now, if I'm an investor and I've been holding gold this whole time and it's done very well, I would have absolutely taken out when that FOMO period when you saw RSI, I think, hit 94, something like that. It was crazy. I mean, you're seeing not just RSI, but a lot of technical indicators were telling you it was so overdone to the upside. Take some of that profit off, put in dry powder, whatever you want to do, and then rotate in. And right now you're going through the digestion period of cryptocurrencies. So you're going to see a rotation of cryptocurrencies, and I think crypto is going to do very well over these next, we'll call it going into Q1. How far does it go? Like I said, don't get too far ahead of yourself trying to pick a date and front run it. Just go with the flow. And then if things get real, it's almost like you could use almost gold as a perfect example. That's what FOMO looks like for everybody who's never seen FOMO. That is truly FOMO. When people are lining up, people are talking about it, people are saying these ridiculous things. Gold's gonna do a 2x from here after it's already gone from a $20 trillion market cap. It has now moved to 30 trillion. Gold is at a $30 trillion market cap before the pullback, of course, that we just had over the last week or so.
I don't think that point cannot be more understated. Like, just look at the history of the gold chart. This is logarithmic, by the way. Like, the traditional moves are not that crazy, but ever since the end of that box that you talked about, this is parabolic. Gold does not move like that normally. This is truly different for the gold market. It really is.
Well, like I said, that Basel III Tier 1 asset was enough to feed it. You talk about the BRICS going in here doing this. And then, of course, you add all the other things with tariffs and uncertainty and fear. And it was a perfect recipe for gold. But has it gotten way ahead of itself? It has. I think gold is going to still do well over long terms. And I'm still a believer. If I'm rotating money out of, like, personally, what I'll be dollar costing average out of crypto positions, I will probably be owning still some Bitcoin. I will still be owning some stable coins, but I will absolutely be still owning some gold, period, across the board. Just because that's clearly a nice conservative diversification for when things could, so you're not completely on the sideline. So if things go up, you're still exposed to Bitcoin. If things get really bad, gold's going to do well. If things really tank and get really nasty, you got dry powder. So that is a very nice recipe for a cocktail when you want to be in some very safe diversification. But yeah, I wanted to bring that up because the fact that you had U.S. gold flying out in January, February out of London, people were scratching their head like, what is this all about? And then, of course, the tariffs kick in. And then, of course, if you knew about all the BRICS discussions, what was going on, and now you're in July with it. So we've kind of connected all the dots of how we got here, and then also why you would probably understand now why, not just some of these trade negotiations with China and the United States, but this is definitely a big piece behind it because China wants to back this whole new system up behind the yen. So I'm sure the United States is in negotiations with them, telling them if you're going to do this, then this is what you're going to have to do if we're going to let you go for that. And that's basically how it is. But hey, let's be really clear here. personally, countries don't run anything in this world. The banks run the show. So that's ultimately what it comes down to. So really, if the banks want this to happen, then it will happen. Whatever how they want to unfold, they'll be involved in negotiations behind closed doors.
That's fair. So I guess I'll play devil's advocate here a little bit. Have we spent the good part of an hour talking about how gold is going crazy, the trade wars between the currencies are going on, and that people are actively trying to fight the world reserve currency of the US dollar? Yes. At the same time, though, hear me out. Back, what was it, 1971, 72, when we had the Bretton Woods Agreement, actually, or no, Bretton Woods was 50s, 60s. 71, 72 was when Nixon took us off the gold standard.
Correct.
One of the reasons that they went off the gold standard is that the economists actually looked at the situation and said, if I am able to redeem my dollar for gold pretty much at any time, this is in the 70s. This is post World War II. We are well past reconstructing Europe after World War II, and we are very much into the Cold War. And at this time, it was actually Vietnam. So we are throwing US dollars all over the globe. There were people that figured out that theoretically, if they tried to do a run on the banks, if you will, or a run on the gold, the US could have literally ran out of gold at the time. There were enough dollars floating around internationally that people from like France or Spain or UK could have brought all of their US dollars over and just taken all of the gold in the United States if it was honored at the 1-to-1 exchange rate. That was one of the reasons why Nixon took us off of that. Ever since that moment, even more economists have been looking at the situation and going, fiat dollar for the US. We know how this story ends. And people, even since the 80s, have been predicting that this entire system is going to go belly up at any moment. That was back in the 80s. It is now the year of our Lord 2025. So the cold water on this nice stream that we're going here is that people have been predicting this for over 40 years at this point, and it still has not happened. I think that is a testament to just the staying power and the willpower that exists in order to keep the current system going, to keep the party going, and making sure that the music never ends. Are we saying that we think that this is going to happen in the next year, even 5 years, even 10 years? I'm on the fence of no. Will it happen in our lifetimes? I think there's a decent chance.
I guess it comes down to how old you are. but just to go back here though, because I know we covered this heavily in the Crypto 101 that we did on it's here on Walk the Block. You can do YouTube channel. It's open for everybody to look at. But in 1933, I mean, Roosevelt basically started this where he took the gold standard off. And that's when you saw the US dollar actually drop in the 1930s. And this is also, when they actually made gold illegal to own in the United States. Now, there were some rare cases where they actually arrested anybody. It wasn't really heavily enforced, but it was illegal to own gold. And they were trying to scare people from owning gold because the United States wanted to hoard the gold. But then it was the final nail in the coffin when Nixon came on the air and stated to everybody that the dollar would temporarily be, anytime government says temporarily, you can just make that permanent. So they took it off the dollar at that time. And that's why, and then of course, if you print something that's not backed by anything, this is why everything seems so freaking expensive, because it's just a massive influx of inflation. So this is why people are looking for hard assets. This is why precious metals are always going to be desired. This is why certainly gold. This is why some people say, hard assets like collectibles and guns, things like that. There's a reason why the collectible industry has gotten so attractive to the wealthy, because it's very easy to do a transaction of, say, something that's worth $30 million than to try to do this in money or any type of thing. This is why collectibles are always going to be valuable, the certain ones that are truly valuable, because it's an easy way to do a transaction in that sense, and also to hoard it. Good luck trying to hold $30 million worth of gold somewhere. I mean, it's a pretty big undertaking. So you have a lot of different diversifications, but I think the fact that you nailed on your head, it was like when you said that the mathematical problem with the networks and Bitcoin, as well as Ethereum with tokenization, it's more of an elegant solution now that we're in a digital world. And keep in mind, the BRICS have been buying not just gold, they've been buying Bitcoin, they've been buying Ethereum. So I think what we're saying is everyone's hedging their bets. And that's essentially what we're going, because there's so much uncertainty. I think gold will always have its place. I think, this new, crypto that we've always been talking about all the time, Lone, is going to do very well as well. And it can be used for so much more things in this world that we live in with digital, whether good or bad. Don't get me wrong, technology is great, but it always comes down to who are the actors that are using it for what purpose they're trying to serve. So that's always the scary part.
True.
And that's kind of where it's kind of where we're leading towards. About diversify across the boards, and this is what you're saying. But I'm hoping we gave you guys a really good example of what the history and how we got here and what's really been going on. It's not just negotiations on trades. It's just not. There's more to it.
And by the way, the key word you put there was diversify, not there's one silver bullet solution. Are we looking at the fiat dollar versus gold one trade wars? Yes, but at the same time, you rattled off a list of things there. The underlying story with this is that this has been an ongoing story for a long time, and there is no single solution to it. Believe me, if there was, we probably would have found it by now. But what we're saying is that when it comes to this kind of a game that you're trying to play, diversifying is going to be a friend. And the reason that we think that crypto is part of that is because, and we're very enthusiastic about it as well, is that we do believe that crypto is one of the ones that has the most to gain, partly due because I think the technology is new. I think it's not perfect, but it's a lot better than all the other ones. And it's also very young, meaning it has a lot of growth potential as well. So for those reasons, when it comes to stuff like this, that's why I like crypto. And to give you the TLDR on this, yes, the US and China have been doing the old saber rattling, and we threatened them with 100% tariffs. We came to the negotiating table. It appears we have a one year stay before we have this big old fight again. But as it stands, China will not be restricting as much of the rare earth materials. So hopefully your Bitcoin miners get a little bit cheaper, hopefully, and a little bit faster. That would be cool too. But also China's going to buy a bunch of agricultural products and soybeans. And for the time being, we go back to what was normal about 2 weeks ago. So outside of that, though, the ongoing fight with the US dollar as the world reserve currency and other people jockeying for their place in the world, that will continue. And by the way, it's never going to end. Alrighty, tell you what, it was lengthy, it was heavy, but I hope that we gave you guys a good explanation there. If you have any questions, please throw them in the chat. We'll be happy to answer them. But we're gonna lighten the mood a little bit. We're gonna talk about a project that's near and dear to all of our hearts, and that's, well, it's the Strategic Ethereum Reserve website, which we're very fond of on this show. But more importantly, we have movement, notably the Pulse Chain SAC. What are you doing? Wow, that is a big drop off. So, Tracker, do we have an answer on where this money went?
Yeah, sure. Everybody in the community has already been speculating. It's been actually getting a lot of attention from a lot of big KOLs and influencers around what's going on. And of course, it's starting to whet people's appetite for Pulse Chain. Basically, it's real simple. The OA has moved those SAC funds, diversified them across many different wallets, send them to Tornado Cash, which is a legal service to use, and to mix it up so that actions can be maybe taken in the future. This is pure speculation on what actions will be taken, but then those actions can be taken without people necessarily seeing the movement. And that's basically how this is all working out. So it's a way to basically move in shadows without people, front running or trying to speculate. I think RH has made it very clear he's trying to reward people who have been here since the beginning. It's going to be a tough pill to try to do that because everyone's going to be certainly got everyone's attention. But by diversifying across many different wallets, it can also lead to easier, smaller chunks of transactions instead of big massive ones, because you have slippage and all types of issues that could occur during all that. So this is to basically, I guess, instead of having one, we'll say monster tank, you've got now, millions of small guns that you can, throw bullets at Pulse Chain when you want to deploy those assets into the ecosystem. That's the speculation, how it's going to work. And I think most of us believe that. I certainly believe it. Just when those actions will take, I don't know. Typically, if you look back at the Hex price, when it really pumped hard, a lot of those same things were done. When if it was RH's thing, I know he wants to probably, if anything, he said he's always in it for the glory, right? So the time to do that would be when you have everyone's attention. Well, if you got everyone's attention, if markets run up and then they start to roll over, while everything's rolling over, and then you just see a sea of green on Pulse Chain's main ecosystems, then I think you'd get a lot of people's attention. So obviously when I say we can only speculate it's RH, but the OA itself taking action would have to implement these changes when, like I said, it would get everyone's attention. And the best time to get everybody's attention is when everything's either flat or down while this is pumping. But just by taking this action alone, he's already got everyone's attention. So that's the good thing for the area. And I know coins have been moving. We're still down quite a bit. So it's not like anything's really moved. I mean, if anybody wanted to get into Pulse Chain now, it's not a bad time to get into it because you're still near towards the lows of all the main 4 coins, which would be Pulse, PulseX, P-Hex, E-Hex, if you still whet your appetite for it, and then also the incentive token. Those are typically the 4 main ones that everyone's been focusing on. And then there's leverage plays like Hedron and Icosa. I personally own those too. Yeah, those would be like more like alpha plays on top of Hex. They tend to move much more aggressively. A Hedron and Icosa ecosystem that was done by Alex, developer, is the only coins that I'm aware of that were actually reviewed by RH's developers, and he actually blessed it on air, saying this is a solid project. And by doing that, for those who aren't aware of it, Hedron was a way to encapsulate staked Hex and almost sell it almost like I don't want to say a CD, but more like trading it like a
it made it transferable is what it did.
Was it's a transferable stake is how it works, but I'm trying to equate it to like TradFi. I don't know if that fell under maybe a bond or something like that, but essentially that's how it would work. But now it just added more features or more functionality to the ecosystem by doing that. And then Icosa was rewarded you could get that by also having your stakes. So those who were participated very, very early, if you did your stakes, you got this massive airdrop on the Icosa when this all happened, and it was tied to your stake. So if you claim your Icosa or claim your Hedron before you end your stakes, you'll get your Hedron free. And that was like, I think, a 10x multiplier. And then it sequentially went down week over week is how that all worked. And this is years ago when they did all this. So that's how that worked. But Icosa was, you could then take your Hedron, you could stake your Hedron and earn yield, which is basically the Icosa. But I mean, personally, I was building up on Icosa just on when Pulse Chain launched through arbitrage trading to load up on Icosa. I always thought, because that's an extremely low cap amount of coin, and I always thought that one's moved in good. So that's essentially what's going on here with the ecosystem. So everyone's stipulating. Go ahead.
The story is we have movement of the SAC wallet. Has the price pumped? No. Have we seen any activity? Not especially. Have we seen, Richard R has been tweeting up a storm, but have we seen anything like profound or really calling anything? Not exactly. The reason we're covering it is because this is step 1. Richard R has been very public about this stuff in the past, which is like he's aware of the game that is involved when it comes to crypto, when it comes to front running, when it comes to slippage, all that kind of stuff. So by putting it through the mixers, it's anonymizing it, so it's harder to track, so it's harder to front run. And then additionally, if you distribute it into smaller chunks, again, it's harder to track, but also you can try to spread it out a little bit and try to minimize the amount of slippage that you have. So nothing has really happened yet, but this is the kind of stuff that you do when you're getting ready to make moves. You could ask the question, why haven't they done it up until this point? Who knows? You'll have to ask the guy. Could this just be a move and then it's going to be a long waiting period? It could be as well. But at the same point, it is movement that we have not seen up until this point, which is why it's the big story.
Well, I mean, you could always chalk it up also for a marketing, right? Because the fact that the sacrifice was sitting there on the top 5, along with BitMine and all this other attention, so it's a good way to get that's a great marketing tool. Got a lot of everybody's attention. Now everybody sees this thing moving around. Like the money is still there, but it's just getting diversified across different many wallets. But you don't know what the wallet address is now because it went through a mixer. So that all makes a lot of sense to me. In that case, I know RH is still bullish on Ethereum. He's already made that very clear. This is why he put those SAC funds into the Ethereum, and he probably was also seeing that treasuries they're gonna start buying them up like treasuries, which has been the trend that's been happening as well. One thing that the RH's developers or whoever he's been probably running various simulations around all this, it's been sitting back just for years now, hasn't been streaming, and just sitting back and probably contemplating and running different, simulations to figure out playing all these different scenarios and what would happen. And I know some people were like, why don't you just go ahead and throw the funds in there? Because if you did, just like other chains have done, you put your funds in there and people will just sell it off. It becomes essentially, I don't know how you want to exit liquidity for that, becomes exit liquidity. It allows people to sell off, get out of the ecosystem. And he's made it very clear he wants this to be sustainable. So he's got it's going to be interesting to see how it all plays out, because he wants to be sustainable. He's always said when he launched Bullshit, he wants to get all the weak hands out of there. Well, we've had plenty of years now to get the weak hands out of there. And we kind of are just basing on this bottom. And it feels like, and you saw it when when everything sold off a couple weeks ago. We had that big sell off because of the whole, we'll call it insider information manipulation, whatever you want to call it, when everything sold off. Yeah, allegedly. The it's a great word. the RH coins held up very well. They didn't really slip much, and you could chalk it up for two things. We've run out of sellers. I think it feels like it's been exhausted. Like there's really no whole lot of sellers unless somebody just finally says, I don't know, during this much pain, you're now going to get out. Like I just wouldn't understand that one at all. At the bottom, no less, like that doesn't add up, but to each their own. Or was it also because the fact that the way that the Oracle data feeds were set up on the Pulse chain ecosystem, which didn't allow for this fluctuation. So that's interesting too. So I think this is interesting times to see, but you will see the ecosystem pump. And I know some big who was the gentleman that was kind of tweeting on his show, an influencer that was telling people to go ahead and start rotating in. He's moving his bags into it. He's watched. I forgot who the gentleman was.
We covered him yesterday, but we did notice that there are a couple accounts that are over like 250,000 followers on Twitter that are actually starting to cozy up and get pretty friendly to the Pulse chain ecosystem. So coincidence?
Well, it should, because they're looking at this thing like, they're moving all these funds. They have all these funds. He's moving them, and it's at all-time lows. Like, okay, so if you look at it just from a risk on appetite, so, okay, if I were to put this, if I'm on the sidelines and I see this, and I go ahead and get into the ecosystem, you got a good chance to easily 2-3x. I mean, that's crazy conservative. But just from an outsider looking in, you could be like, this might be easy money right now at this point if you were to front run this before things start taking shape. So yeah, I can see that taking place too. I just think, and then of course, it was funny with the RH ecosystem. All the influencers really just jumped on zero hedge. Oh, that was hilarious when he made the comment about basically thinking that the SEC, he's still under investigation by the SEC, so he's a little late to the party. Well, it became a flurry of comments to reassure that the SEC case has been dropped and he actually won it. Period, flat out won. So there's still a lot of people out there that don't quite get it. And then some people on the outsiders might be still asking the questions, well, if Pulse chain and this hex and all this stuff, if it's that good, why isn't it listed on any central exchanges? Well, we've covered this for years and years and years. And the way the central exchanges work, it's quite simple. You have to give up 10, 15, whatever percentage of your coins to them to basically anoint you to basically to be able to be listed on their platforms. So that is very much you have to get taxed to get on these central exchanges. And this is why anytime you go to like Coin Market Cap, for example, you'd always see Hex and other coins in his ecosystem always at 201. By default, never move. Now, occasionally it was always funny because the ecosystem, the community would always be laughing because occasionally that algorithm that would had it locked down would slip up and it would push it in the top 10 when Hex was on other, like I remember not Coin Paprika, but there was a couple other ones out there before they got bought, of course.
I think it was MEXC, was it?
I don't know. It could have been that one, but I remember there's another one out there that a lot of us were going to that was really much more fair, and it really was taking everything in consideration. And it had Hex listed up there in the top 5, top 10. It was up there for a while, and then you would see it on CoinMarketCap, then it go away. But this is old history, what we're talking about now. But what we're saying here is, yes, the ecosystem has been gatekept for a long time, but the thing that's great about the Hex or the RH ecosystem and RH and the community that we're all a part of, that reason why I love it a lot is it really has exposed how corrupt the industry is, from the central exchanges to corrupt influencers to you name it across the board. It's really has exposed it. And I think this has just been a community that's been punished and beat down and always been looking like the outsiders. But hey, you got the OA, it's sitting on a stack of Ethereum. So that's why I look at it. I look at it like that. And I think that now you're starting to get attention. So what new things could happen? The one thing that would certainly get everybody to get up even more would be if RH started streaming again. That would be a huge jump for the community if he could start doing that, having the leader come back and start talking. The only thing that's sticking out there is that ridiculous, accusation from out of Sweden from Interpol, which to me it holds no water whatsoever. And I think everybody's debunked that many times. So has his lawyers, just like the SEC was completely debunked by his lawyers and completely won the case. Straight up won the case. This wasn't draw, it was won the case. So I think them and XRP are the only two that can claim that.
Pretty much.
That had beat the SEC. So that's in a very rare class. Of course, everybody knows XRP because it's, top 10, top 5 market cap. But needless to say, this is why it's starting to get a lot of attention. For people that aren't aware of the ecosystem, do your due diligence. Look it out there. It's a really good ecosystem. It's done everything it said. Uptime, everything works. It just works. The only thing that you could say it's been a knock on it was maybe some people rubbed the wrong way when RH did the shock marketing, because that kind of got them away from being able to go on maybe real TradFi shows to really talk about everything properly. That's one thing that I personally wish never happened, but it is what it is now at this time. Hey, RH has built a pretty good ecosystem. So I mean, I like to see him come back. I like to see him talk more people, have actual really good debates and discussions, and get on some of these bigger shows to explain to people what's really going on with everything in the crypto world, because it's highly needed. So I'd love to see him come back. Personally, even if I was an investor, I would love to see him come back, just for the knowledge and for the good debates.
We all would love to see that. Those were some good debates for sure. Tell you what, though, I think that is about going to do it for us tonight. But I do want to real quick give a shout out to some of our friends that have showed up. We got Mr. Wonderwolf coming in with the oi. Will Stevenson, as always, salute to you, sir, giving us the update. Yes, it was Coin Paprika. That was the magic oracle while it lasted. And then, begrudgingly, although I don't really have a dog in the fight, but Farmer J, aka Brown, saying Doyers, reference to the Dodgers right now. I will say it's currently 4-3. Blue Jays are up right now in the World Series, but he's been tracking those. I love having the friendly rivalry going on with that. So shout out to all you guys. Thank you so much for showing up tonight. And by the way, if you want more of us here, you can check us out by joining our Telegram. The way you do that is you head on over to walktheblockndf.com. You'll find our membership page, and down there you can join us inside of the Telegram. You can expect live streams, up-to-date chat, and a bunch of Q&As. If you want exclusive access to us, pick our brains, ask any questions you got, share your research, ask other people what they're interested in, that's exactly where you can do it. So, folks, the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together. Private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. When we all work together, we can all win together. That is going to do it for us this evening. Tracker, any final thoughts, sir? And where can the folks find you? What do you got going on?
No, just check us out in the Telegram, like you stated, and the DGen Roundtable. We're always in there dropping information, trying to keep everybody plugged ahead. The stuff we talked about tonight, we actually brought to their attention. I want to say beginning of last week or a couple weeks ago. So we tend to always front run for them. Top priority is them. We're trying to build a community where everybody can work and talk together and safely, share ideas and regardless of your knowledge and where you're at. So I'm always looking forward to being in there. The other thing, obviously, here on Mondays, we always try to be here Monday. Last Monday, unfortunately, couldn't make it. And then the other thing we will definitely be keeping people posted up on this busy week and what's going on. So definitely
big week coming up.
Big week. Yep. A lot of good stuff happening here. I mean, you got rate cuts, you got negotiations still have to be finalized between China and the United States. You got, it's just a lot, man. It's a lot of stuff coming up. So it's not going to be lacking, that's for sure. Just would like to see, personally, I'd like to see Ethereum break through 5,000. That's what I'd like to see.
Look, I definitely think that's in the cards. The case for October is still there. I think last time I checked, we were up by about 0.5% for the month. Right now, I think we're maybe down in the red by like 0.1 or 0.2, but we still got a few days left. So I'm not too worried about it. We had a good September anyways. And look, it's not going to line up perfectly every time, but we do follow the patterns for a reason. And look, I think there's an excellent case that October is still alive. Might not be as big as we wanted, but still alive nonetheless. Alrighty. Outside of that, folks, you can find me over on Twitter and Instagram, or X now, if you will, at ZenithDI. And then outside of that, catch us in the Telegram. You can find us for all the latest and greatest in there and literally ask us whatever you want. The whole point is we're trying to build a community and get everyone up to speed so that we can all kick butt and, take some profits along the way. So outside of that, folks, just remember, we did weather a pretty rough storm recently with the great liquidation event and then getting rocked all the way down to $103,000 Bitcoin. But it looks like we're on the up and up. So keep a weather eye on that horizon because I think there are a lot of good things to come. Outside of that, I want to thank you so much for joining us here tonight. And until we catch you guys next time, I hope you guys have an excellent week. And I guess go Dodgers if you're those guys. But outside of that, thank you so much for joining us. We will catch you guys later. Thank you. Good night.